Hi traders, this is Cynthia of Day Trade Forex, and in this video I'd like to introduce you to my extra advanced template that can be used for either currency pairs or for CFDs or indices. And right now I have loaded the currency profile, which I made using the best moving currency pairs, and they all load in the 30-minute time frame. However, you can change these currency pairs or you can change the time frames to suit your trading preferences. The profiles I've created for you just give you a basic start to help you get up and running. So this is the pound US dollar in the 30-minute chart, and I'm going to point out the new indicators that are in the extra advanced template that are not in the basic or advanced templates. First of all, we have the red zone here, which is a resistance zone, and this is your blue zone, which is the support zone. So because this is such a special indicator, we trade mainly by selling out of the red zone and then exiting out of the blue support zone, and conversely on other charts I'll show you how we buy out of the blue zone and then exit out of the red zone. And this template also comes with a double line trend channel, so the support lines are double blue and the resistance lines are double red, and they coincide very nicely with the supply and demand zones, which are resistance and support. So basically we are looking for trades that are following the major trend of the gold Bollinger Band line, selling out of the red resistance, taking profit along the way at the Fibonacci resistance and support levels, and then you can have a final exit all the way down to the bottom when price actually hits support 2 and the blue support zone. And you can see that the double channel is a downtrend, and the golden Bollinger Band trend line is in it. Everything is in a downtrend, so there's no question whatsoever about what direction you should be taking trades. And because everything is so clearly and obviously in a downtrend, you would only consider taking sell trades. I'm going to use my crosshair to show you the first entry for a sell trade. It would be after the gold arrow showed up, and we have the light pink arrow that has shown up, and this would be your entry, your sell entry. And if you let your eye go down, you can see the trend bars are purple, which coincide with the purple candles. The CCI dot is purple, and the CCI yellow trend line, which is your trigger line for momentum, has crossed below the -100 level. And down below, the multi-time frame zero lag MACD shows that the yellow trend line, which is the 4-hour trend line, and the orange daily trend line are both below the purple zero baseline. So that tells you that the 4-hour trend and the daily trend are both down. And in the very bottom window is a new indicator. This is my volume indicator, and right now it doesn't show a lot of volume because there's no yellow poking above the gray bars. But as the trend continues down, and you can see that the trend does just keep going down with some pullbacks along the way, which give you great re-entry sell opportunities. Finally down here is when momentum starts to pick up, and that's getting to be around 2 a.m. Eastern. So this is in the beginning of the London session, where you can see that the volume actually really does start to pick up. You can see the volume in the bottom window. The gray bars have yellow poking above, and that's showing you volume is intensifying, and it continues. The volume continues all the way to the end of the day. So this white dashed line right here is the period separator, which shows you 5 p.m. Eastern, and this happens to be Friday at the end of the week, so price pretty much just goes flat. That's very typical for a big movement, whether it's up or down, for the next day price to just go really flat. So here's a tip for you if you're trading these high average daily range currency pairs, and this is the average daily range here for the pound US dollar. AGR means average daily range, so spread over 10 days, the average number of pips it moved is 78 pips, and that's spread out over 10 days. And this was actually Friday, so it's half. You can see that the average daily range really on Friday was half of what it normally is, the average of 10 days. So you can see a big downtrend here, and then the next day it goes flat. And the day before this downtrend, it was flat the entire day. I'm going to move this currency strength meter out of the way, and you can see that the day before, this was Friday, Thursday, Wednesday, Tuesday. So Tuesday was a really big downtrend. The next day, Wednesday, goes flat. Then Thursday is another big downtrend, and then Friday it goes flat. So that's very typical price movement of a major currency pair that has a high average daily range. So that's the pound US dollar in a 30-minute chart. Here's the pound yen in a 30-minute chart. And you can see kind of the same thing. This is Thursday with a really big move, and then Friday it all goes flat again. And I'm going to explain the currency strength meter in just a second. This is the 5-minute Euro US dollar chart for those of you who like to scalp, and I've drawn green lines for your buy entries, and we had two. This was at the pretty much close to the end of the day on Friday. You can see a lot of consolidation, and then a little bit of an up move, and then more consolidation, which is shown by the white X's. But we're buying from the blue support area, and then price does reach in between these double red resistance trend lines, and followed by white X's, and at the same time price actually did hit Fibonacci resistance 1. So you have two ways of knowing right here that you should have exited your trade because price reached a high and it wasn't likely to push much higher, and indeed it did fall back. It went into some consolidation and then fell back. If you look down here at your zero lag MACD, the 4-hour trend line, which is yellow, has crossed below the daily orange trend line. That is another exit buy signal. So when you see the yellow 4-hour MACD trend line cross above the orange daily trend line, that's a good entry somewhere in here. This was actually our first entry after the white X's disappeared, and we have a big uptrend. The 4-hour and the daily MACD lines are both above the purple zero line, so that tells you uptrend is very strong. Don't consider any sell trades, just consider buy trades. And then at this point price falls off, and that's your exit signal. Also earlier, when it's very flat here, when there's a lot of congestion, a lot of white X's, the Bollinger Band trend lines are very narrow and tight together. This is all range consolidation, no trade zone. And you can see it down here in the zero lag MACD. because the daily and the 4-hour trend lines are on opposite sides of the purple line. So that tells you that the trend is very, very small. If you ever thought that you wanted to scalp trade, that might be okay, but you're not going to get very much out of it. Especially for scalping, it's really, really important that both the 4-hour MACD line and the daily MACD line are both on the same side of the purple baseline. So right here is where the 4-hour MACD line actually crossed above the purple baseline, which now it's on the same side as the daily orange MACD trend line, and also the 4-hour yellow line is crossed above the orange daily line. So that's even a second confirmation of very strong uptrend. And you can see it, this was the beginning of the whole uptrend. And in a 5-minute chart, if this would have been your perfect entry and your exit would have been here, that's 28 pips. And you just would have to wait out this white X consolidation, but you wouldn't be actually exiting your trades because you have the double support trend line. Price is still above it. Price is still above this blue zone for support. Price is still above the gold Bollinger Band major trend line. And price has actually stayed above the middle Bollinger Band trend line. So there was no reason for you to exit out of panic. You can see the major trend. You can see the MACD is very strong up here. The MACD uptrend is very, very strong. So you would just respect the indicators. You'll have to come to understand them and learn to trust them. And that will keep you in the trend longer, which is the whole idea, so that instead of just getting 5 pips, you can get 28 pips or 25 pips after spread. In a 5-minute chart, I know a lot of people like to scalp the euro US dollar, but it doesn't usually yield very much. It's not a big mover. You can see the average daily range is only 51 pips per day, which is not a lot. I typically like to trade at least a minimum of 70-75 average daily range pips per day. So I would like to see this be 70, 75, even 80. My favorite pairs trade even more than just 80 pips per day on average. This is the pound New Zealand. And remember, these are all 30-minute charts, and there's big moves. Pound New Zealand moves really well. But again, after this big move spread out over 2 days, Friday was very quiet, very small range. So you have to anticipate that. If you've had really big moving days before Friday, typically Friday is going to be very quiet and it actually be a good day to take off from trading. Here's the pound Aussie. The big uptrend started right here when the yellow MACD crossed above the purple baseline, and the daily MACD trend is already very high up, far away from the purple baseline. So we've been in an uptrend, but this was the beginning of your entry with the gold arrow. And a lot of consolidation around 5 p.m. Eastern, and then a resumption of the uptrend. So this is Tokyo session, just a couple of hours after Tokyo opens, and this would have been a perfect buy entry, and then your exit would have been up here when price poked into the double red resistance trend channel. So that would have been a great exit. And then the next day, Friday, this one moved a little bit better, and this was your entry after a pullback. You had another entry here, and then price poked into the red resistance double trend channel, and that would have been your exit. And then to confirm, here's your Fibonacci resistance too. So make sure you're out of your trade. Here's the year CAD. And this was a nice uptrend. I have already marked out and identified the buy trades after retracement or after consolidation. This would have been your ultimate exit right here when price poked into the red double trend channel and also entered the red resistance zone and also crossed the Fibonacci resistance 3. Now here's the pound CAD, which I have to point out at this point that the currency strength meter shows that the pound is a very weak 1.9 blue. Blue is the weakest color. 1.9 is one of the weakest numerical values. The red CAD is the strongest. 8.0 to 9.0 is the strongest numerical value, and red is the strongest color. So I know at a glance that we're having a very strong downtrend in the pound CAD. We're looking at a pound CAD, and at the end of the day you can see that the pound was weak and the CAD was strong, so the pound CAD as a pair is being sold off. And the currency strength meter is an immediate representation of the strength versus the weakness of all of the 8 currencies. So we can see here at the closing bar at the end of the day on Friday was a very strong purple downtrend candle. Everything is downtrend. Even here in the MACD, the orange daily line and the 4-hour yellow line are both below the purple 0 line. So this is where the downtrend really became apparent. It is an early indicator. The MACD is a leading indicator, and it told you right up in here when price poked into the red double trend channel and into the red resistance zone, even before the light pink reversal arrow showed up and the candle turned purple. You can see here right around the same time, maybe 1 bar earlier, the 4-hour trend went down. So that is confirmation that the uptrend has completely ended. This is your last chance to get out. And on the very last candle of the day, you can see that the pound was super weak and the CAD was super strong. Together they're showing you a very strong downtrend for this pair, and I bet all during these 30-minute candles, even the pound and the CAD were probably still showing relatively that the pound was weak and the CAD is strong, showing extreme sell-off for the pound CAD as a pair. Euro New Zealand dollar shows a really nice uptrend starting back here, and it just here would be one exit point, and then on Friday it goes flat again. And on the last candle of the day is a downtrend candle. The CCI yellow line is turning down. Now the MACD is split, so the orange daily trend is still up, but the 4-hour trend has gone down. Here's the Euro odd, and again the uptrend started back here, and you had an exit when price poked into the double red resistance channel lines, and some pullback, consolidation, flatness right around 5 p.m. Eastern, and then a couple hours after, when the Tokyo session starts, the Euro odd starts back up again. But basically it was not a big mover on Friday, and it goes into some range, pretty messy. So Friday again was not a great day to be trading, and that's kind of typical for at least Friday New York session. It gets pretty dull. So that's it for the currency template for the Xtra advanced system. Now I'm going to switch to the CFD template for the Xtra advanced, and I'm going to switch and click on the profile, and then we'll load up the profiles for the Xtra advanced for the CFDs. Okay, I have the CFD Xtra advanced template loaded via the profile that I've created for you. These are all my favorite CFD trading instruments, and right now we're looking at the gold chart, and the CFD charts all open in 15-minute because I personally prefer to trade CFDs in 15-minute. And if I know that I'm approaching economic news events, red economic news events, or the US stock market open, I switch down to a 5-minute so that I can really see price action close up and very fast, so that I can get the best entries and exits, because the CFDs typically don't have the really long trends that the currency pairs have. And so you do need to trade CFDs in the faster time frames, 5-minute or 15-minute, and try not to stay in a trade when it goes into consolidation or it stalls or slows down, because the reason is that the CFDs use a lot more margin to trade, so they're costly. Each trade position costs you sometimes as much as 10 times what a position for a currency pair would cost you. If you're not very familiar with margin or leverage, or you have very low margin with your broker, like some European and the US brokers only give you 50-to-1 leverage, and sometimes for the CFDs they give you even less. What that means is that each position costs you a whole lot more money than if you're using leverage of 200-to-1 or 100-to-1. 200-to-1 is my favorite amount of leverage to use, because a position cost me 4 times less than when I'm trading with a US broker at 50-to-1 leverage. So with higher leverage you can make more money per trade, but also if the trade goes against you, you're going to very quickly start losing more money. So with CFDs you have to learn how to trade them. Everything is pretty much the same except for the leverage, the cost of each trade, and the fact that they don't stay in a trend very long. So you have to be nimble, you have to be quick, you have to be alert, you have to stay with your trade and exit at the very first sign of weakness, because it can really go against you. And because of the leverage, the amount each trade is costing you, it can very quickly go into negative dollars for you. So scalping CFDs is my best recommendation in the 5 or 15-minute chart, and you can see nice entries here, and you can see that, for instance, with this buy entry, this is the Fibonacci resistance 1. The minute that price hit that Fibonacci resistance 1 on this candle is when you should have exited. So again, we're using Fibonacci support and resistance levels to enter and exit our trade, and as close as we can get, especially for exit, because here price just goes flat and then reverses. So even if it just had retraced this little bit down here, you would have given up all of your gains. You would have been negative in your trade, and you would have been panicking, because sometimes it can go negative really fast, and there's just no reason to stay in a trade when you're trading CFDs when the price has stalled or started to reverse. The absolute last minute you would have gotten out is when you see the pink candle appear, and even then, you know, you're giving back some pips. Even though this was a nice trade, this would have made a whole lot of money. So let's look at a silver chart. Silver doesn't range quite as much as gold, but still each position can make you a lot of money. I actually make more money trading silver, even though it tends to not trend as much as gold. Gold doesn't trend that much, but when it gets going, it really gets going. So if you are lucky and you're catching, like here, a sell trade from the red resistance area and then you sold, look at price bounce down here. and into the blue support zone. Here you were buying right out of the blue support zone. So if you use these red zones and also the red resistance double trend line channel lines and the blue channel lines for support, if you trade between the red and the blue, get your entries as close to the bottom of the blue and your exits right in the red, and then reverse your trade. When you get the gold candle, just reverse your trade and then possibly exit. Especially this is getting close to the end of the day, so the trends were really getting tighter, smaller range. So definitely use your Fibonacci levels to exit, because that's going to be the safest way for you to trade when you're trading CFDs. Here's WTI crude. You can also trade Brent crude oil, and oil can move pretty good. A lot of people really like to trade it. And with these indicators, it makes trading it a lot easier. I know, because I've tried other people's trading systems. It's not that easy. And here's the US 30, which really, actually, a lot of these indices or CFDs trade really well at the open of the stock market. So at the open of the London stock market, or the open of the Japan stock market, or the open of the US stock market is when you're going to see the big movements. So if you learn at what times those stock markets open, then you can trade any of these CFDs. Trade pretty good for any of the stock market opens around the world. But of course, the US index, the US 500, the US techs, they trade really well at US stock market open at 9:30 a.m. Eastern time. And also the US 30, the US 500, also gold, silver, they do really well starting at 7 a.m. Eastern. So right here you can see this big movement started right here. It is 7 a.m. Eastern, and somewhere around in here is 9:30 a.m. Eastern. Price really got going way before the US stock market opened at 9:30 a.m. And then your exit would have been right in here at Fibonacci resistance 2, and that was pretty late in the day. So on Friday, I have noticed that the indices or the CFDs really do move well on Fridays. So if you learn how to trade the indices, you can not trade currencies on Friday, but instead trade the indices on Friday, because always towards the middle part of the trading day, starting about 7 a.m. is when the big moves on Friday start to happen. Here's the US 500. You can see that the same thing happened. This is 15:30, so that's 7:30 a.m. Eastern time on Friday. That's when the big move started. Here is 16. This is actually 9 a.m. Eastern, so it got started a half an hour before the US stock market opened. So if you're interested in trading CFDs, Friday's a great trading day for them. Here's the US tech. Here's again 5:15, so that's 7:15 a.m. Eastern Standard Time on Friday, so it really got moving pretty good. And here is on Thursday. That is right at 9 a.m. Eastern. So 9 a.m. Eastern, 7 a.m. Eastern can be pretty good times to be on the lookout for a trade opportunity. Here's the DAX, which is more popular with Europeans because North American people are asleep during the London session. So the DAX is really popular with Europeans, and look at this really big move on Thursday, and then, you know, towards the end of the day it goes flat. And Friday, again, it started, that is 9 a.m. Eastern on Friday, so that was a good time for the North Americans to trade the DAX, which typically can move pretty good. Here's the Japan index, and it usually gets started right at Tokyo Open, so This white dashed line is the period separator for 5 p.m. Eastern, and right after that is when the Tokyo session opens, and the Japan index really gets going pretty good right at the Tokyo Open. So that's a great one to trade if you're in North America and you can't trade any other time, and the currencies don't move very well usually in the Tokyo session, but the Japan index really moves well starting around the Tokyo Open. So that is Asian session, which is really easy for North Americans to trade right after dinner time. You can get a couple of hours in a 15-minute chart or a 5-minute chart, and just stay with it until price reaches the first Fibonacci support or resistance. So here would have been your entry, and then here would have been your exit, and that is 20 points, which is the same as 207 pips. So that was a nice movement on Friday. And so if you can learn the Japan index, if you're in North America and you just want to trade during the Asian session, and you know the currency pairs don't move very well, other than sometimes the yen cross pairs will move. Sometimes the Aussie and New Zealand cross pairs will move, but not always. But I'm telling you that almost always the Japan index will move in the Asian session. If you trade it in a 5 or 15-minute chart, you only need to trade for a couple of hours, and you can make a really good living just becoming very familiar with this one indice and learning it and being very aware of price action and just becoming familiar with it, concentrating on it, and you can make your entire living just with this one chart. Amazing, isn't it? And here's Bitcoin. Bitcoin, when it starts to go, it can really go, but it does have a lot of consolidation time. Because I like Bitcoin, I like to trade it. So I hope that this gives you a nice introduction to the CFD and the currency extra advanced templates. Now I'm going to pause the video for 1 second, and I'm going to load up my profile that I've combined my favorite currency pairs and my favorite indices into one profile. And so if you have a newer computer that's strong with a lot of RAM memory and a fast processor, you can use this profile I'm going to show you. I'm going to load it up. But if you have an older laptop or older desktop with not very much RAM and not a very fast processor, you probably won't be able to load up this next profile I'm going to show you because it's very resource intensive. So if that's the case, I'm really sorry. You can upgrade your device, or you can go buy a new device, or just don't use this one profile. And so now I'm going to pause the video and I'm going to load the profile for the extra advanced, which includes my favorite currency pairs and CFDs. Okay, traders, I have my profile loaded, which is my extra advanced favorite currency pairs and CFDs all in one profile. So this is what I load every time I sit down to trade, because this way I can keep an eye on each of these trading instruments. And of course I do get the pop-up alerts, which I've explained in other videos, which draw my attention to price action on any one of these charts. So the pop-up alerts actually are really, really important, and I pay attention to them because it draws my attention, and I'll go look at that chart and look at what it's telling me. And that's how I get my trade entries, by having all of these charts ready. All of them have the pop-up alerts, and of course you have to be really ready for a lot of price action, because these are 15-minute charts, so you can get a lot of pop-up alerts in a 15-minute chart with 17 charts. That can be a lot of pop-up alerts, so you have to be really alert yourself and on the ball and ready to trade. And especially with the CFDs, remember that you're short-term trading. You're not trying to catch long-term trends like you can with the currency pairs. And these are the best moving currency pairs. I do not include the Euro US dollar for a very good reason, because it just is not a big mover usually. And people complain, you know, that they just don't make that many pips trading it. If you're lucky to get 15 pips, that's pretty lucky. Personally, I don't want to trade for 10 or 15 pips. I want to trade for 100 or 200 pips or whatever, you know, whatever I can get. 50 pips is a lot better than 10 pips. So that's why I trade currencies with a high average daily range. Now with the currency pairs, the average daily range is in pips, but for CFDs, everything is always in points. So the average daily range is, this is points, whereas for the, here's the pound USD, it's in pips. So you have to always remember that, and especially when you're using the trade button, because the currency pairs are reflecting pips. But when you're inside of a CFD trading instrument and you're using the trade button, everything's in points. And that's just how it is. I don't know why, but that's just how it is. So that wraps up this introductory video to my Xtra advanced template, and showing you my favorite CFD charts and my favorite currency charts and the time frames I like to trade them in. And I don't recommend changing the time frames unless you're going to go to 5-minute for the CFDs. Trade the CFDs out of 5 or 15-minute. But if you're more interested in the currency pairs, the 15-minute is just for uniformity to get started, but you can change these to any time frame that you like, and you can trade 4-hour daily if that's what you're into, or 30-minute or 1 hour, 5-minute, 1 minute, whatever. And you can adjust the time frames and the trading instruments to suit your trading preferences, and then you would just resave this profile and just name it a slightly different name so that you know the difference between the profiles I've created for you. I've created 5 complete profiles, and when you buy the Xtra advanced system, you get the CFD profiles and the currency profiles, and in the trade button you also get the currency and the CFD set files. But if you only buy the advanced or the basic system, you do not get anything related to CFDs. You don't get the set files, and you don't get the charts. You don't get anything for CFDs, because that's strictly for more experienced traders who are more experienced, especially with leverage trading, and who realize that you need to basically be scalping or day trading when you trade the CFDs. So that's just a word of warning, and just the way I've set it up for your own protection, because I don't want anybody to be hurt by trading. I want you to be able to get rich by trading, and I've set everything up the way that I think is better and easier and safer for you. So don't change the time frames for the CFDs, but go ahead and change the time frames to suit yourself for the currency pairs, and then just recreate this profile and save it with a new name. And I teach you that. I have a training video strictly on how to use the profiles, and so study that training video, and then you'll know how to recreate and resave your profiles with a new name. And then when you sit down to trade, you just click one button and it brings up all of your charts, your favorite charts for that trading session. So the Xtra advanced has everything in it. There's nothing more I would put in it. I wouldn't subtract anything from it, because I think that you're getting the best of the best here. And believe me, I've been doing this for so long. I've been trading. I started trading Forex in 2002. I made my first trading system in 2004 and had to market it because that's what I wanted to do. So I've been doing this for a really long time. And in 2010 is when I started creating my color-coded trading systems. Everything is color-coded. You can see in this trading system, everything is color-coded. It really helps your brain process the information. And you cannot buy this Xtra advanced template unless you've already first purchased the basic, which is where you get familiar with my color-coded indicators and you understand them. And then you can buy the advanced template, which has a few extra things, including my trade button. That's something new to learn. But in the Xtra advanced template, for instance, you have the currency strength meter, which you need to learn, and the supply and demand zones, and the double trendline channel. And of course, in the advanced system, I've already introduced you to the CCI indicator, which is a very sophisticated indicator. But in every template you get the MACD, multi-time frame MACD, but only in the Xtra advanced you get the volume indicator at the very bottom. Of everything that I've included in this template, the least important is the volume indicator, because it doesn't affect my judgment at all whether I'm going to take a trade or not. It just gives me a little more information about volume. It's important, but it's not super important. What's super important is the multi-time frame zero lag MACD. That's probably my most important indicator. And second would be the CCI. If you can get to understand this, and I've created a video just teaching you how to use the CCI, then these two give you all the information that you need. And so learning these two indicators is the most important thing. Well, I would say the Bollinger Band trend lines are very, very important, because that's really the heart of retracement trading. The fact that you can see the gold long major trend and the medium purple line trend and the fast light pink trend, and then the arrows. The little arrows are the retracement arrows that tell you when to exit and when to enter a new trade entry after a retracement. And so the little arrows are really, really important, but we don't ever trade against this gold trend line. So that's it for the Xtra advanced system. I hope you enjoyed this long video, and thank you very much for watching, and we'll see you in more videos, and thanks again.